Hi class, this is Dr. Sharma again. I'm going over the financial statement analysis part 6. This is the last segment in the chapter. In this chapter, basically, we're going to talk about the learning objective number 6, which describes the contents of corporate annual reports. Now, apart from the financial statements, corporate annual reports contain management discussion and analysis. Basically, the management will discuss different scenarios, risk they have been facing, the general environment and specific environment, and analyze that how it has impacted their business. And then the next thing they would do is they would be, of course, asking auditors to conduct an audit of their internal control as well as the audit of the financial statements. And the two auditors will be reporting on their findings, whether the internal control has been effective and efficient or not. And in case of fairness of the financial statements, the auditor will issue a report whether the financial statements truly reflect the affairs of the company or not. Now, then you will be seeing four financial statements. Those are income statement, statement of retained earnings, balance sheet, and the statement of cash flows. Now, income statement will have a comprehensive income segment as well, but we are more interested in the income statement as such, not on the comprehensive income part. And then we'll be seeing lots of notes accompanying the financial statement. So these are some of the segments in the annual report, corporate annual reports. Now, as I said to you, in addition to the financial statements, there will be lots of other information that you can see about the company. So we talked about the management discussion, we talked about the reports, financial statements, and the notes accompanying the financial statements. Let's just briefly talk about the management discussion and analysis. Now, management discussion and analysis is one of the required elements of Form 10K, which most of the companies will be filing with the Securities and Exchange Commission. It includes management's analysis of current operations and what they plan to do in the future. Of course, whenever they are discussing the current operations, they will be talking about the current environment and explain how it has impacted the business. And they will also be talking about what are the risks and how they are planning to mitigate that risk. Now, typical items that are included in the management discussion analysis are basically the analysis and explanation of any significant changes between the current and the prior year's financial statement. So in 2020, most of the financial statements, you will see the impact of coronavirus. So that is sometimes there is a natural calamity that happened in the area where the company was operating, or supposing we have heard about fire in the rigs of some of the energy companies. All that will be discussed and how it has impacted the financial statements. And then they will be also talking about important accounting principles or policies that would, in fact, affect the interpretation of the financial statement, like any changes in accounting principles or any new principles that have been adopted by Financial Accounting Standards Board. So that would be another area. And then they will be also talking about the liquidity and the availability of the capital to the company to exist in the long run or pay off the liabilities. So that is another area they will be talking about. And again, as I said to you earlier, significant risks, exposures that might affect the company, and any off-balance sheet arrangements such as lease not included in the financial statements. So sometimes lease do not qualify to be included in the financial statements, and those are considered as off balance sheet arrangements. So they will be talking about if there is any off balance sheet arrangements as well. Now, the next segment are the two reports that I talked to you about. The Sarbanes-Oxley Act 2002 requires both these reports, report on internal control. Now, that has become a big thorny aspect because it was not required earlier than Sarbanes-Oxley Act. So now, once there were so many accounting and business scandals around the period of 2000 and 2001, Sarbanes-Oxley Act was drafted, implemented, passed in the parliament with a bipartisan vote, and then it came into being. So it requires a report on internal control by the management. The report should state the management's responsibility for establishing and maintaining the internal control. So it is not the responsibility of the auditors to establish and maintain internal control. It is the management's responsibility. So that's why whenever you're discussing any aspects of that, you should be very, very clear that it is the responsibility of the management to establish and maintain the internal control so that it runs effectively. In addition, management's assessment of the effectiveness of internal control over financial reporting is also included in the report. Then the Sarbanes-Oxley Act also requires a public accounting firm to verify management's conclusions on the internal control. So, thus, there are two reports on internal control, one by the management and one by the public accounting firm, the auditors. And they are both included in the annual report. Okay, so as far as internal control goes, those are the discussions about them. Two aspects. One is the management is taking the responsibility of designing and implementing and maintaining the internal control and giving a statement that it is being managed effectively and internal control is working fine. And then the auditors come around and verify the management's assertion about the internal control. Similarly, another report, a report on the fairness of the financial statements, are also made available to the users. Now, basically, it closes the gap between what a company is saying and what the people feel about it. So that is the perception of the user. So because independent auditors are people who are not employed by the company, they are independent of the company. So that is why there is an expectation that their assessment is going to be fair in general. So most of the certified accounting firm are engaged to conduct the auditor, and they ultimately render an opinion. So the opinions are qualified, unqualified. Unqualified is the best one. Qualified, or sometimes they will be modifying their what you call reports, or they will be issuing a disclaimer if they can't give an opinion, or they will be also giving an adverse opinion. So essentially, there are four different types of opinions the public accounting firms can issue, that is unqualified, qualified, adverse, and a disclaimer of opinion. And it is called the report of independent registered public accounting firm, and they will be reporting about the fairness of the statements. Now, an opinion stating that the financial statements do present their information, financial information in terms of financial position, that is looking at the balance sheet, results of the operation, that is in terms of the income statement, and cash flows of the company is said to be unmodified, so or sometimes called a clean opinion, as I just said to you. Okay, and any report other than unmodified opinion raises a red flag for the financial statement users and requires further investigation as to why that happened or why the public accounting firm issued such a report. Now, always there is going to be a push and pull between the firm and the public accounting firm engaged in the auditing, simply because the corporations don't want the reports or opinions which are not unmodified, so or unqualified. But simply the reality is that public accounting firms are engaged by the company, so sometimes there is some sort of a compromise, in the sense that the auditors might say, okay, these are some of the problems, now you go and fix them and then we'll see. So they will again verify whether the suggested modifications are made or not, and then they might decide on a opinion. So that is your so um, the clean opinion is either unmodified opinion or unqualified opinion. In the past we used to call it as unqualified. So all right, so that would be your opinions. Now, financial statements are the next elements in an annual report. A public company which is held publicly by stockholders spread all around the globe are required to have and submit their financial statements. So the financial statements they will be doing are income statement, statement of retained earnings, balance sheet, and the cash flows. So now, apart from those four financial statements, we already learned in another chapter how to prepare them, a simplified one. We'll continue to prepare a little classified kind of financial statements in future chapters. All companies are required to make disclosures relating to the financial statements, because if you have calculated or you have recognized the revenue, so how did you recognize the revenue and when did you recognize the revenue? So if you bought a plant and machinery, how many years did you think it will last and how did you calculate the depreciation? So there are certain kind of policies, accounting policies, assumptions that the companies make, and there are some basis of judgments. Like supposing if you say 2% of the accounts receivable, we consider them as prospectively uncollectible. So that is an expense and that will be charged to the income statement, and then it reduces the tax burden for the company. So that those judgments have to be really explained. So that is what you will see in the note. Usually the first note is a note which explains the different accounting policies, and other notes accompany. So usually in the balance sheet or the income statement there is a reference, and it refers to a note. Now, that is all in this segment of the class. That is what is a annual report. Now, usually there are two formats of annual reports. So as I have been doing in the past, I've been using ExxonMobil as well as some Chevron company to illustrate the different aspects. So in this also, I'm going to do the same. So let us start with ExxonMobil's annual report. Okay, so this is your ExxonMobil's annual report. Now, as you can see, this is a Form 10K which they submitted in 2020 for 2019. Now here it gives you which state it is what you call registered in or incorporated for that matter, and what is its exact name. That is something that you have to learn about. And then what are the kinds of stock that you have issued, and which is the exchange it is registered to. So that will be, so here it is apparent that they are issuing common stock, and the common stock is listed in New York Stock Exchange. So now, what kind of a filer is this company? So here it also gives you kind of outstanding common stock, how many stock are outstanding now. Of course, that is also an important one. Now, then in the table of content, you see business, the risk factors, unresolved staff comments, property, legal proceeding, mine safety. These are all disclosures and information about their executive officers is also disclosed. Then in part two, they will be talking about the different stock they have issued and any purchases they have done, and then they will talk about the selected financial data. Usually try to just give an overview of what is the financial operation. Then, as I said to you, one of the important element is the management's discussion and analysis of financial condition and results of operation. So that is what they will be talking about. And then they go on to talk about the financial statement and supplementary data, and any other aspects that they would think important to disclose. And then next part would be the directors, executive compensation, security ownership, and principal accounting fees and services. And then they will be giving you the Form 10K summary, the exhibits, financial statement schedules, the financial sections, and then the signatures and the certification. So this is how they would be organizing their information. Now, as I said to you, basically we are interested in the first part, and then of course if we want to dig deep in some of their important information about their developments in the past, then of course we would be interested in these activities as well. But basically, I'm interested in the financial statement. So that is what I'm going to look at. And then I'll be also showing you the reports on internal control and the auditor's report about the fairness of the. So now these are the listed what you call executive officers, so the chairman of the board, and then senior vice president, CEO, and other board members will be listed here. So that is in the information that you will be able to find as such. And then they will also be giving you information about how much salary is paid to them and things like that. Now, here we are coming to the financial section. So in the financial section, as I said to you, management discussion analysis, and then you will be having the management's report on internal control and the report of the independent registrar's public accounting form. So now, as you can see, we have management report and a report of the auditors. Now, sometimes some companies engage two different auditors, one for the internal control and another for the financial statements. So you might see two different companies engaged in auditing. Now, whenever we are talking of auditing, basically we want to know who is the auditor who audited the financial statements. So we are not much interested in the report of the auditors for the internal control, but we are interested in the auditor's report for financial statements. Now, and then you can see here the different notes, 20 kind of notes they have appended to the financial statement. So this is the profile. So now what we do is we directly move on to page 41. Let's go down and see the management discussion and analysis. Okay, so this is the management discussion analysis section. Here they talk about the functional earnings, about the forward-looking statements, and then they provide an overview of the business, long-term business outlook, and then they continue talk about the upstream and the downstream factors. Then, of course, since this is an energy company, they will be talking about the chemicals and explorations. Then, of course, this management discussion analysis is continuing. So we come down, still go down. This is the management discussion analysis continued. Okay, we continue that. And here you can see the management's report on the internal control over financial reporting. Now you can see the Price Waterhouse Coopers, an independent registered firm, accounting firm, audited the effectiveness of corporates' internal control over financial reporting on December 31st, 2019. So that is what you mean by that. And they also say that they have used the COSO standards, that is the internal control integrated framework issued by COSO, the Committee of Sponsoring Organizations of the Tradeway Commission. So that is, and you can also see that the officers have actually put down their signature. So that is, it signifies they are aware of it and they are recognizing whatever is stated there. And this is the report of the auditor. Now, as you can see, they have engaged what you call Price Waterhouse. Here they say that Price Waterhouse Coopers LLP, that is engaged to issue the report. So that is the report they have given. And out here they will tell what was their opinion. Now they what you call conducted both the audits of the internal control as well as the financial reporting. So that is why you will see that what you call information in their report. So so then at the end, you will see when they finish their field work, the date, and what was the office which was responsible for conducting that audit. So now they will be also talking about, you can see the critical audit matters as well. They will be expressing their opinion and talking about what is their opinion. Then what they do is they present their consolidated statement of income. And as you can see, they have given you references to the numbers. So if you go to note 7, it will explain what is this. And depreciation and depletion, note number 9, non-service pensions, note number 17. So that is what these notes are. So this is where they will further explain that. As you can see, consolidated statement of comprehensive income, we are more interested in the consolidated statement of income and to study them. Okay, so now of course consolidated comprehensive income is an appendix to, or in addition to, the income statement, which includes other comprehensive income net of taxes, and talks about the controlling interest and the non-controlling interest. And next is the consolidated balance sheet. This is the balance sheet which gives you the financial position. Usually these are available for 3 years, and the balance sheet is available for 2 years. So you can see the current assets and long-term assets, and they also have investment. So they will be explaining in note number 9 about the investments. Then the property, plant, and equipments, they will be giving further explanation in note number 9. They will, so these notes actually give you further explanations about different aspects. Then they have the statement of cash flows as well as the notes. Then this is the statement of changes in equity, which is similar to the statement of retained earnings. So here you can see in retained earnings, earnings reinvested, and what was the controlling interest part and what was the non-controlling interest part. Now, then they start the notes, as I've been saying. Note number one basically list the summary of the accounting principles. That is what you would see in most of the companies. Okay, so that is about the ExxonMobil company. Now, what we are going to do is we're going to go back and look at a Chevron. Now, Chevron has the same information, but they have prepared an annual report. So for Exxon, you would see basically a Form 10K. So as you can see, this one was Form 10K. Okay, but Chevron has an annual report. Now, the Form 10K is going to be part of the annual report, but apart from the information that's given in 10K, annual reports sometimes will have more information about that company. So that is something that you have to understand about the. Okay. All right, so let's see Chevron company's annual report. Okay, now as you can see, this is a typical annual report. Now it is colorful, and they will be trying to, give as much of footage about the company, and they also would be including a letter by the chief executive or the chairman of the board of directors, and additional other factors or strategies that they have implemented and things like that. So that is why the annual report looks different, but they will have, it contains the financial statement, management discussion and analysis, the notes and the reports of the auditors. So this is to our stockholders. Basically, they're just giving an outline about how they are doing, and it is signed by the chairman of the board and the chief executive officer. Now, some companies have a different person who is the chairman of the board and a different executive officer. That is expected in terms of a good corporate governance, but many companies have a single person, which is the chair of the board as well as the chief executive officer. So now, as you can see in this case, they have a lot of information and colorful pictures. So this is the chair as well as the board of directors. Now, fairly diverse group of people are on the board of directors. These are the corporate officers, and then they will be talking about the company, giving you highlights about what has been going on, about the returns to the stockholders, and then they will also be giving you a financial highlight. This is just a highlight, it is just selected numbers, and usually in the financial in the annual report, the highlights, they will try to highlight something that they would like you to know about them. So what we are interested in basically is, now these are the management discussion and analysis. As you can see, this is the management discussion and analysis part, which talks about key financial results, earnings, business environment, and new accounting standards or any environmental factors. They also talk about litigation and other contingencies. Now, those will be important elements. And then what is their liquidity, its operating results, and all that. then we go on to the report, the financial statements which we are interested in. So you can see there is a report of the management, then the report of the independent registered public accounting firm, then you have statement of income, balance sheet, statement of cash flows, and the statement of equity, which is similar to the retained earnings. And then you can see the notes. So they have 26 notes listed here. So that is how this what you call financial table of content is. Now this is the part of the form 10K. So let's go and look at the consolidated financial statement. It's on page 49. So let's go to page 49 and let's take 49 and see. Okay, no, it's not taking to page 49. So let's try and scroll down to page 49. So whenever you are starting your annual report, it is important that you see the table of content. And here you can see management is talking about their responsibility for financial statements as well as the internal control. And you can see they have also hired PricewaterhouseCoopers LLP to do their audit, right? So that is something that you will have to understand about. And this is a report of the independent registered public accounting firm. So as I said to you, this is the audit report, and it's signed by office in San Francisco, and they completed in February. So we saw in ExxonMobil's case, I think it was in Dallas, Texas, but in this case, the office San Francisco, California was working on that. So here you can see again the consolidated statement of income. Now, only difference we see is in these, they don't give you the notes accompanying those, but they do have the notes. It's not that they don't have, but it's not that organized as was in case of ExxonMobil. Now, this is your consolidated balance sheet, and you see their consolidated information. Then this is the consolidated cash flows. This is the retained earnings. Then you can see the notes. As I said to you, most note number ones are the summary of significant accounting policies, and they have other notes, as you can say, changes in accumulated other and comprehensive losses. They talk about that. Then this is the information relating to consolidated statement of cash flows. And so these are the two different kinds of what you call annual reports. So when you're working on your company, now what I would suggest is you try to download both Form 10Ks so that you will be able to find the information in the similar area. So that will help you kind of navigate through the information, and always read the table of content to get an idea as to where the information is located. So that was my presentation with regards to the annual report. I hope you will find those useful. I'll be seeing you.